Welcome to our day's feature presentation, Never Lost Trading Alerts. We have multiple alerts where we show trade situations according to our algorithms, like you see them up here on the chart. Where are there possibilities to sell or to buy and go with the directional change of an asset making a price change. Today, I want to focus in particular on one very specific alert. It's called the pre-market movers alert. It comes out basically every day before 9 a.m. East, and it measures stocks, forex, and futures with a potential high volatility price change into the trading day. And I will also show you how you can spot those opportunities and how you can follow them. Let me briefly introduce myself. My name is Thomas Barman. I'm your presenter today, and I want to make you aware of the risk in trading, and also want to make you aware of one thing. Never lost trading doesn't mean you never lose a trade. It originally came from the focus of never stop loss trading. So we repaired trades and showed people how to repair a trade instead of taking a stop loss, but never stop loss trading was a bit lengthy. So never lost trading, you know now what it means. We have high probability trading. We trade by algorithms that spot and follow institutional money moves right on the chart. A good and smart fisherman nowadays uses technology to find where the fish are, because those are the good places for taking them out of the water. And pretty similar for trading, we want to show you how you get a trade finder so that you can trade where the prices move. And those are our never lost trading alerts. And as said in the introduction, I will focus today on pre-market movers and how to follow their moves intraday into the new day. Our core slogans with never lost trading alerts are trade where prices move, because that's what you want to have. If they sit still, it's not going to help you making a return on them. And you don't want to be late for a trade. You want to know in a pre-stage, initiation stage, or continuation stage, but not in a late stage, when a price starts moving a certain direction and how far it moves and how you can be part of that. Today we focus on the pre-market movers alert. As said already, comes out every morning before 9 a.m. So giving you enough time to say, okay, that's where certain of the assets move and that's how I can be part of that. The question might be, why is there pre-market activity? When you see it from a bigger perspective, at the end of the day, the stock market starts trading 6 p.m. the prior night, when futures restart trading, and then new price points are set. And the same for many of the assets that are traded on the US exchanges. They find new price points prior. And then US exchanges also catch up to those price points. And there's an advantage in it. Key will be for you what charts to trade from, what time frames to use, how to capitalize on moves. And here is a little secret. We use 2-minute chart for certain of the trades right from the gate, and we use a 30-minute chart to follow through the day the individual price changes, and we always trade by the never lost trading principles, which I will explain. In this presentation, we take 2 days, February 13 and 14, and guide you through the individual setups and how to capitalize on the price moves. So you see here the layout of the report. It first lists the individual movers, and you see here highlighted in orange or yellow and green. Green are the better ones to trade. Orange ones are still good, but the green ones are easier ones to trade. And then you also have indications like, is there potential to trade it with options? Yep, that was the case in Amazon. For the rest, it was not. So it goes through giving you sectors. So you saw metal and mining. There were a lot of the same sector, and you want to maybe picking one of them to trade the direction instead of all of them. And then you see here the last price. It was noted the opening price move that would be in relation to a 2-minute chart. Yeah, so what you expect in the return, and those highlighted in red say, well, return is not so fantastic. The others are better, but anyhow on Amazon, because it's the green, we want to definitely always look at those to see if we can bring a good trade home. Then we do the same on a 30-minute chart, give you an indication for the opening price, then how much it is potentially opening above or below their last price that was indicated on the prior day, and some indication on momentum and trend. Now we'll go and look with you in detail how that panned out, how many of those we were able to bring to winners, how many we were able to bring to losers, because that also happens. That's part of the game. But the thing is, on a high probability trade system, you usually have more winners than losers. And when you can realize that, then profit can be made. Let us dive directly into the results. On the left column, you see the symbols again that were listed on the morning report, then the last price, and then you see the outcome on a 30-minute signal. And I go through the 2-minute signals too, yeah? And then I give you the chart example. So basically, the first one did not get a confirmed trade. What is that? We only trade if the high-low of one of the price thresholds that are spelled out on the charts are taken out by the next candle. If that's not the case, you have no reason to trade. And so here, for example, on NOV, there was not the case, so no trade. But let's go through. Then you see here LNG had a top line and trend signal. So I refer to the different systems so that you get a feel for how does that trigger. So it was on candle number 2 on the chart, and the exit was at candle number 5. The gain was 60 cents, and the return on margin was 4.9%. That's solid, and it moved 2 times our expectation what we had, but I show you how to trail that. So let's go all the way down here to Amazon. Amazon also on candle number 2 had an entry, candle number 5 an exit, made a $7 move or a 3.4% return on margin, and it moved also further because originally we had panned out a little less of the movement, but the movement realized. So sometimes we were slightly over, other times we were right on, but we have a method, and we show that on the chart, how to trail and trace and move with the price direction right from the gate. In summary, we produced 1, 2, 3, 4, 5 winners on a 30-minute chart, and 1 was a loss. And the good thing was also our winners were bigger than the loss that we captured. Looking at the 2-minute chart, you see all except one of those stocks triggered a directional signal. You saw at various candles was the entry, but mostly at the very beginning candles, right from the gate. And then we have between candle 5 and 8, right from the gate, or here 10 and 15, we have our exits. There you see the gain and loss. So again, we had 1, 2, 3, 4, 5, 6 winners, 1 loss, and the average win was higher than the loss. And we were often right on with our measurement, where you had the right expectation directly on the report how far the price move will last. And on a 2-minute chart, you have very, very little risk. So that's a nice way of trading with little risk for a fantastic return. Let's see how it looks on a chart. Here's the chart for Amazon. And it's a 30-minute chart. So you see here right off the gate, we had a strong candle, and we have a spelled out price threshold here. Buy above 834.90. So it gives us enough time in the next candle to enter into the trade. And then you see here our minimum expected price move as we had it calculated. But also we do one thing. We'll move along with the price move until candle number 5 of the same sequence. You see they're all blue. And there was the exit. So with the exit at candle number 5, we produced a much higher return than the minimum anticipated return on that chart. And I'll show you a couple of more examples so that it gets clear to you of how that can be done on multiple time frames, basically for all assets. So the same here, Amazon, but now on a 2-minute chart. And you see here, same rhythm, 1, 2, 3, 4, 5. Yeah, if you get out of candle number 5, then you capture that price move over here. And then re-entry, re-entry. And the red line here that you have, if you want to stay long with one strong price direction, would have gotten you in all the way from 832 and scale up with me, because there you would trail with the red line, and there would be your exit at 838. So that's a $6 capture price move on a 2-minute chart with a very, very little risk, because your risk basically would have been $1 and your outcome would have been a $6 price move, and that's super duper fantastic. This example is another stock which was on the list in the morning. Yeah, so it gapped up in the morning, but gave a signal here, but the signal was not confirmed, so no reason to trade. And then on the reversal signal, there we get into this one. Yeah, if the price gets ticked out, and it was, and trade it down all the way to that borderline, and there it might be a good way of exiting. And that's what was done. And with that, also a profit was achieved. Let's look at the next chart. You remember from the report X, United States Steel Corporation was on the chart, and here again, right from the gate, first signal confirmed 1, 2, 3, 4, 5. That would be a good entry, or you'll trail. Because you saw here there was no reason to get out, and again re-entry, and that's the nice thing. So you got a nice re-entry, and then when you trail that re-entry with your red line, it carries you all the way up here where there's a solid exit, and if you trade it later in the day, there's a confirmation signal, and it gave you another trade on that. So for these pre-market movers, usually we don't trade very short time frames, but there we know volatility is in the stock and it guides us in particular on two chart setups, on a 2-minute and on a 30-minute chart setup. Let's do the same for February 14. Yeah, so we only had two possibilities here, CVX and Celgene. And that was what we traded from, because usually the report is small, but I wanted to show you a report that had multiple opportunities. Now we have two opportunities and want to see how they panned out for us. Celgene on the 30-minute chart. So right off the gate, let me highlight it for you. Right off the gate here, we had our signal and we had our price threshold. Yeah, sell if the price drops below 150 and 70 cents. It did in the next candle, gave us enough time to get into that. And there you will see another sequence that we trade for, what starts in the light hour, ends in the light hour. So those trades will be much easier to be done if you have the software and the vector graphics, because what is a light hour, you might ask? A light hour is this thing that got a cyan dot, and that's a sequence where you best exit the trade, because there's always a trade initiation, trade exhaustion pattern, and you see that happened on the reversal too. A buy signal got confirmed, and then the price exhausted itself. So what starts in the light hour likes to end in the light hour, long or short. So those are the key imperatives. And later on, I want to invite you to be part of this alert for free. Yeah, because the alert is $259 a month. But if you want to be part of it for free, it'll take you one little effort, and I will give you the details when you stay with me in the presentation. Now, CVX, here you see the price jumped all the way down. Big price drop at the beginning, exhausting a lot of its price pattern. Still an entry. Exit at candle number 5. Yeah, it didn't make the expected profit, but still it made a profit. And so you see we follow clear-cut rules where to enter, where to exit, and also where to place our stops. CVX on a 2-minute chart. Yeah, so there you saw the first signal was not confirmed. Next candle didn't tick lower. Took a longer time for the first signal to come on board. There it was ticked in, and you could use the red line again for trailing your stop. So then you would be out basically here, capturing a good part of the price move with very little risk, because the red line is your risk line. This is how you can trail along and always keep your risk at bay while you assume for a long directional price move on the other hand. Similar for Celgene, the opening gate price move did not get confirmed. Later on, there was one get confirmed. Yeah, 1, 2, 3, 4, 5. Out gave you only a little profit, and the real nice profit came in a little later in the day. You saw here, those are confirmed price moves, and then we are scaling down in a continuation pattern and capturing this, and later in the day we capture that as well. And you will learn which ones of those to trade, why prices move in a certain direction. This is only a very little trade that we share with you in our mentorship. There you see a top line chart. It really covers only very little, but it's a very effective thing to know right from the gate for intraday traders what to trade, how, what charts to use, when to enter, when to exit, and where to place a stop. To learn all the details, we have our NeverLossTrading mentorships. There we do installation of the software for you. Everything will be done on a free platform, so you can keep your current broker relationship. You don't have to change or switch. Data is real time without even the need for funding an account. You have always clear entry, exits, and stops for every trade. We help you with the position sizing model, time in the trade. You saw that candle 5 model that we shared. You'll hear the risk, how to handle risk, and how to handle drawdowns. And we make together with you a business plan for trading success. When you say my time does not allow those day trades that you feature today here, yeah, for us they are very important, because they don't want to take the overnight hold. But we'll have strategies and work with you in all those dimensions over and over to focus on your specific wants and needs as a trader, making the plan totally tight fit to your requirements and your best wishes and abilities. Let's take a look again when you can follow those patterns, and you'll do that on all time frames. Starts in the light hour, ends in the light hour, candle with the cyan dot. Starts in the light hour, ends in the light hour, and you have clear-cut price thresholds. That is making life much more easy than trading from a chart that basically looks like this. Yeah, will be much harder to find where the trade situation is, and where it led to. Yeah, so now you see, okay, that's how they did it, but it has nothing to do with those lines. I just put some moving average stuff on here to give some indication we are not moving average base. We trade by the initiation of a price move right from the spot when the signal separates from noise and is no more random. That's how we take our entries. But see, this is usually how the average trader looks at the chart, and then it's much harder to determine, but some of you might still be able to. So therefore we want to invite you, check out our morning alerts, see if they can give you value, but also consider work with the software, because it's much easier when you trade what you see. We want to give you the opportunity to try out our alerts, the pre-market movers, for free for 1 month. So you need no credit card, no sign up. The only thing we want to do, because we want to capture a little bigger base, we want to ask you, invite 3 of your friends to watch that video or read our little post presentation here, so that they get an idea how algorithmic trading works and how price moves can be captured by clearly defined entries, exits, and stops. So that's all you have to do. Sign up 3 of your friends for that video, and then there's a counter on it. When that is accomplished, then you will get for 1 month our alerts, the pre-market movers, for free, and they're usually out before 9 a.m. preparing you for the new trading day. For questions or to sign up for one of our mentorships, or if you want to have a personal consulting hour giving you the idea of how everything works, but do us a favor, time is precious, do this if you're really interested in it, then call us at the office, 866-455-4520, or write an email to contact@neverlosttrading.com. We are working always one-on-one with every student, focusing on your wants and needs. And with that, time is precious and spots are limited. But still, we are looking forward to hearing back from you, and we'll always focus on customer service and trying to help you to be the trader that you want to be.